Some people, they think that trading is extremely difficult, so they don't get into the world of trading. And on the other hand, there are some people, they think that trading is so simple that they can do anything they want in the market and they will be successful. But when they start doing it, that is when they realize that they are wrong. Okay. Trading is not easy. You need a framework, you need a system, you need a set of rules. Okay. In this video, I want to talk about trade management. I want to give you some guidelines because trade management is where trading becomes an art. Before trade management, everything is mechanical and very scientific. In this video, I want to discuss with you why I always keep saying that trade management is an art. So, if you look at my orange trading system, the system that I prepared for myself to simplify my framework. This framework was already in my mind for many years, but it is a very complex task to simplify something. It is a very complex task to simplify something. And this is the best I could do for you. Okay. So this helps me, this will help you. The the elements that you see inside this, these are stock selection elements. They are marked in gray. Liquidity analysis, comparative analysis, technical fundamental market analysis. This is all mechanical, scientific. There are a set of rules based on which you can select stocks. So these gray circles are about stock selection. Position sizing, trade execution, also there are specific defined rules. Okay. So it's also mechanical. It's not very complicated. Even risk management, it is just about managing your stop loss. Okay. When you come to trade management, that is where things get tricky. Okay. In fact, when you buy a stock and it goes up, I mean, now you don't know what to do. Okay. Buying is very easy. Everybody can buy. But what about selling? Okay. That is where people get stuck. And I want to give some guidelines to help you with that in this video. Filters is also mechanical. By the way, I explain this system in detail in my video course. So please check out my video course. Extremely important. I cover each element in detail there. Okay. So filtering, then have a list, select the stock as per our criteria, decide the position size, execute the trade, put the stop loss and manage the trade. Now let's say you buy a stock and it goes up say 20-25%. Now what do you do? Okay, you basically have five options. Okay, have a look at this. You have five options. You buy a stock, it goes up 20-25%. What should you do? Okay, so number one, do nothing. Number two, sell less than half. So maybe you bought 100 shares. Out of 100, you could choose to sell 25 shares. So that's 25% of your position size you're taking off the table. Then you have sell half. So out of 100, you sell 50 shares. Then sell more than half. So out of 100, you will sell 75 shares. And then sell all. You sell everything. Okay. So this is the problem. This is why I called trade management as an art, because you have five options and you have to make a decision every single day as the stock is going up. You have to make a decision every single day as to which one of these options you are choosing. Remember, when you are not doing anything, you are choosing one of these options, right? Do nothing. Correct? So every day when the market closes, you are consciously, subconsciously making a decision which falls in one of these categories. Correct? Now, if the stock starts to fall from your buy point, you know how to manage it with a stop loss. I am talking about those stocks which you buy, it starts to go. What are you going to do? Okay, how are you going to decide which one of these options is the best option for you? So, for example, let's say you buy a stock, it goes up 20-25%. Okay, and market conditions change from confirmed uptrend to uptrend under pressure, or it goes into downtrend. What will you do? You are more inclined towards these two options, correct? Sell more than half or sell half. You are more inclined towards selling because market conditions have deteriorated. Or let's say you took a positional trade when the market was in a rally attempt. Now the market has gone into a confirmed uptrend. In that case, you will be more inclined towards these three options. Either you do nothing, or you sell less than half, or you sell half, right? So the weaker the market condition, the more you are likely to sell, and the stronger the market condition, the lesser you are likely to sell. Correct? Basic guideline, this basic logic, basic rationale you can use. Next, the stage of the base. So there is early stage, middle stage, late stage within the confirmed stage 2 uptrend. The more late you are in the movement of the stock, the more you should be inclined towards selling. So you should be inclined towards these two options. And the more early you are, let's say you are bought the stock in the early stage, the less inclined you will be to sell your shares. So you will be more inclined towards these options, right? Another scenario, like the fundamentals of the company deteriorate. Suddenly, the earnings EPS results gets announced, and suddenly the stock goes from 100% EPS growth to minus 25% EPS growth. What are you going to do? Most likely, you will sell more than half, or you will sell all. Correct? Because this has got nothing to do with market condition. This has got everything to do with the individual stock, the personality or the character of the stock. Another scenario, let's say window or something like that. You buy a stock, it goes up, then there is a window. Okay, what are you likely to do? You're likely to do choose one of these two options, right? So whenever any situation presents itself, you make an assessment as to whether that situation is bearish or bullish. If it's bearish, you are more inclined towards the right side of this diagram. If it is bullish or less bearish, okay, then you are more inclined towards the left side of this diagram. Okay. And if you don't know what to do, just sell half. Simple, right? Very, very simple logic, very, very simple rationale. Okay. So look at market conditions, look at the stage of the base, look at deteriorating or increasing fundamentals, then look at technical sell signs like the falling window, uh, close of the rising window, things like that. Look at moving averages. Like, for example, a stock breaks the 21-day moving average or the 8-day exponential moving average. You should be more inclined towards selling, right? At least the later four options. It's not that you will do nothing. If it breaks a particular moving average and that too on high volume, okay, you will be more inclined to sell. Another thing is volume. Okay, if you see high volume weak close candle, like a candle closes below the midpoint, okay, of its daily range, then that too on high volume, something like a shooting star. What are you going to do? Right? You are more likely to sell. You are likely to sell more than half, or at least half. Right? So there are a lot of factors that govern your decision as to which one of these options are you going to choose. Now, less than half could mean 25%. It could also mean 30%, 40%. Anything below 50% is less than half. So there are actually, these are five options, but there are actually millions of options that you can choose from. Okay, you could sell like 32% or 27.5% or whatever you want to do. Okay, but literally you can see there are millions of options that you can choose from when it comes to selecting this, but I've categorized it broadly into five different options. So you have to keep an eye on market conditions. You have to keep an eye on what stage you are in during the confirmed uptrend. You have to keep an eye on technical sell signals like falling window, rising window. You have to keep an eye on deteriorating fundamentals, right? You have to keep an eye on moving averages. You have to keep an eye on the how much distance the stock has traveled from your buy point. You also have to keep an eye on major events, like suddenly tomorrow there is a budget announcement or the election results are going to be announced. What are you likely to do? You're likely to sell more than half, or at least more than half or all, because you don't know what is going to happen tomorrow, right? So it is a factor that should be on your mind. Correct? Some coronavirus, like something news comes, what are you most likely to do? You are most likely to sell more than half, right? Another thing that people don't consider is your realized gains. So you look at your past 3 4 trades. Past 3 4 trades, you have a good amount of realized gains. Okay. Which options are you going to choose in your fifth trade? Okay, you are less likely to sell, or you are likely to sell less number of shares because you already have realized gains, so you can tolerate more risk, right? Very important points. Also, your realized gains also affects your decision making. Out of these five, which one are you going to select? Your position size. Let's say you are sitting with a huge position size, maybe 20 25% in a stock. Maybe you took a lot of risk, okay, and you don't know what to do, right? The market is confusing. The market has gone from uptrend to uptrend under pressure. You are sitting with a huge position size. What are you most likely to do? Which option are you most likely to choose from these? You're going towards the right hand side, right? Sell half, more than half, or sell all. These are basic guidelines. Okay, stocks breaking 50-day. What are you going to do? Stocks breaking 200-day simple moving average. What are you going to do? You're most likely to sell. You are most likely to choose options which are on the right side of the chart. Correct? So this is what I wanted to discuss. Trade management is a very subjective topic. There are no rules here. I can't give you rules. Okay. These are only guidelines. You have to look at different things: market conditions, the stage of the base, the fundamentals, the technical sell signs, the moving averages, the distance the stock has traveled, election or some major events, things like that, and then take a decision. Also, have a look at the industry group rank. If the industry has started to deteriorate, maybe you will be inclined to sell more than half, right? Position size. So, lot of things coming into your calculation when you are sitting with a position. This does not happen when you are buying. Buying is very simple. You look for a stock which is like an orange, like looking for an orange from a fruit basket. It's very simple, right? Trying to pick an orange from a fruit basket. There's nothing complicated there. Complication begins here. I know so many people in this recent market downfall could not sell. They don't know when to sell. At least should have sold by when it closed below the 50-day simple moving average. Don't know selling rules, no idea. Don't know when to check base stage, don't know when to check market conditions, don't know we have to check moving averages. So education is important, knowledge is important, right? Basic guidelines I have given you. If you just take notes, imagine how much this will improve your trade management skills. Thank you so much.